Good afternoon, ladies and gentlemen, and welcome to the Solid State results presentation. Before we begin, we would like to submit the following poll, which you'll see on your screens. Throughout this presentation, investors will be in listen-only mode. However, questions are encouraged and can be submitted at any time by the Q&A tab situated on the right-hand corner of your screen, or if anyone has dialed in via solidstate@walbrookpr.com. The company may not be in a position to answer every question it receives during the presentation. However, the company will review all questions submitted today and publish responses where appropriate. These will be available via your Investor Meet Company dashboard. Finally, we would like to remind you that this presentation is being recorded. I'd now like to hand you over to Chief Executive Gary Marsh, Chief Financial Officer Peter James, and John McMichael, Managing Director of Solsta, the Components Division. Gentlemen.
Thanks, Tom. Yes, Gary Marsh, CEO of Solid State. Welcome to our 2024 final results presentation. Thank you for taking the time to attend today, and I hope you find the meeting informative and come away with a better understanding of our business. We held a Capital Markets Day on the 22nd of May, and there's an Investor Meet Company video on the research section of our PLC website, which is hopefully well worth a watch. We received some very positive feedback from the event, especially around how the CMD brought the components division of the business to life. So I said, well, we're worth taking a look at that. We also run regular site visits to our HQ and components and systems operations in Redditch, just south of Birmingham. So if you're interested in attending, please contact Tom Cooper at Walbrook PR. So I'll just briefly talk you through what we're going to be covering in the presentation this afternoon. We're looking at who we are, how we're structured as a business, our business model and customer base. Then we move to financials that Pete will lead, followed by reviews of the two divisions of the group, components and systems. Then we'll talk you through the four key pillars of our strategy and M&A, closing with some really exciting organic growth and M&A opportunities before we take your questions. So as we plan for growth, we spent the last 8 years strengthening our senior leadership team. Talent development is very important to us, and during the last 12 months, this team has gained invaluable experience presenting at investor conferences in the city, and most recently in May, leading our inaugural Capital Markets Day, which we plan to do again next year. The quote at the top of this slide, I think, really does encapsulate what we do as a business. You might say, Gary, how do we do that? It really boils down to two things: know-how and capabilities. The know-how of our people to work hand in hand with our customers, become an extension of their engineering team, designing the right technology for the given application. We spent decades investing in our test and measurement and production capabilities. Year by year, we continue to develop our infrastructure. Today, there are very few, if any, independent businesses that have the breadth of infrastructure that we can now offer our customers. Collectively, our know-how and capabilities help us to create that real stickiness between us and our clients, and you can see that in the length of time we've dealt with a number of our blue chip customers. As a group, we work hard seeking out new customers for the future through our marketing initiatives and our 56-strong BD team, and exhibiting at numerous trade shows around the world. Now, moving to how we're organised, the business is split into two divisions, as you can see here, systems and components. We'll provide you with a divisional review later in the presentation, but suffice to say, the two divisions are highly complementary. For those of you who know us, we carried out a brand refresh and launched a new Solsta brand. We've made 4 acquisitions in our components division to date, and felt it was time to consolidate the business under that one new unifying brand, Solsta. And we'll cover branding in a little bit more detail later in the presentation. The mission of Solid State is to build an agile business of ever-increasing scale and resilience, with the shared benefit of all of our stakeholders, our primary measure of scale being earnings per share. Each side of the business complements the other. Components gets advanced warning of changes in the supply chain that fed through to our systems business, shortages being a classic example. While systems gets advanced access to new designs while they're still at the architecture stage, allowing components to visit engineers and get their products designed in ahead of the competition. The two divisions are often working together, the most common area being batteries, for example, where the components business development team are working with the customer who has a battery pack requirement. This gives each side of the business much greater reach and access to solutions that otherwise wouldn't be available. We're very proud of a long-term blue chip customer base, supplying our trusted technology into their demanding applications. Many of them operate globally, so a large part of our business is fueled by international demand. Just to give you a flavour of that, in 2019, international sales represented 20% of our business. Now it's 57%. Renishaw is an example of a component customer that came to us because of our value-added services. They're both a component and systems client now. With Philips Healthcare, 3M and AV Dennison utilising our battery packs in their products. The benefit of scale is starting to pay dividends, supplying more products to our tier 1 customers, so improving organic growth. That said, we see significant potential for further growth across all our business units as we broaden out our complementary product and technology profile. I'll hand you over to Pete now to talk you through some of the financials.
Thanks, Gary. So here we've presented a snapshot of our financial highlights. And our financial highlights really show the significant progress the group has made over the last 5 years by delivering on its clear and relatively simple growth strategy. And I'll come into these highlights in a little more detail on the subsequent slides. In terms of operational and non-financial KPIs, you can see here, employee retention is a really important, critical part of what we do to retain the talent we've got across the group. Continue to work hard to retain this industry-leading team, and we've also been working hard to develop inclusion and diversity. Recruiting in technology and engineering is somewhat challenging, and whilst our gender diversity percentage has fallen slightly in this period against the backdrop of significant growth in headcount, our diversity in our senior leadership team has made real progress, with a third of our team now being female. Our sector diversity continues to be strong, and you can see the impact of the NATO contract, which was 20% of the group's revenue this year. In terms of technology and engineering, it's not easy, but by doing the right thing, we've actually managed to maintain our diversity, and we're looking forward to seeing that continue to improve. So why invest in solid state? I think many of you have probably seen this before, and it's really about building on the successes we've had over the last 5 years. And you can see there we're very proud of our achievements, where we've maintained very strong growth in revenue, EPS, and that's translated into strong shareholder returns as well. So the ambition is to replicate that success, being an international leader providing sustainably engineered components and systems, being the enabler, facilitating innovation and the electronic solutions with our customers. We're targeting growing revenue and improving operating margins to 12%, and that will drive growth in EPS, which should enable us to maintain that in excess of 20% compound growth in TSR. Moving on to the numbers for the year, the order book, whilst reflects a reduction, reflects the normalisation post the lead times and the shortages returning back to more normal 12 to 16 weeks. Pleasingly, that normalisation has stabilised, and in the first couple of months of this year, the order book has increased a little from the year end. In terms of revenue, it reflects the benefit of the NATO contract and the pull-ins we reported in our trading update just before year end, which results in record revenue growth. Operating margins, just over 10% this year, and we can see the benefit of the operational gearing that's come through in the year. That translates into record EPS at just under £1, and that's given us the ability to increase our dividend to just over 21.5p. The strong profits benefiting from the operational gearing have also helped the other balance sheet metrics in terms of net debt is coming down, return on capital employed and return on equity are improving, and net assets are increasing. So looking at a little more detail in terms of the revenue bridge, we've had the benefit of the full year of Custom Power. We've seen significant organic growth of close to 30% in the year, significantly driven by that NATO business that we talked about previously, as well as organic growth in the systems division, which has exceeded some of the headwinds we've seen in the industrial and transport sectors. In terms of components, components saw a very, very strong growth in FY23 as a result of the shortages, where we were able to be on the front foot and supply our customers to meet their demands. We saw significant stocking up in FY23, which has normalized in 2024. However, if you look at the underlying trend, other than 2023, it continues to be positive for our components division. In terms of systems, full year of Custom Power and NATO are clearly very strong drivers and more than offset the small FX headwind we've had in the period. Turning to operating profit, we've continued to invest, and you can see that in the overhead investment in the year, and that's driven by the impact of inflation as well as the full year of Custom Power, plus the additional headcount, which is up about 30 heads year on year. The operating profit sees the benefit of that volume and the operational gearing, as well as a slightly richer mix of business with the growth in systems revenue this year. Coming on to the key balance sheet metrics here, you can see the non-current assets investment offsets the depreciation and amortization in the year. Working capital, as ever, represents a snapshot in time. And as we announced the pull-ins just as part of our trading update, that's resulted in inventory coming down significantly and receivables being higher than normal. That has unwound in the post-period end, and we've seen a significant working capital inflow in the first quarter of this financial year. If we go further down the balance sheet, the deferred contingent consideration, which related to Active Silicon and Custom Power, has been paid in full in the year. Moving on to net debt. So net debt at the beginning of the year was 8.1 million. We've had very strong cash generation from the business in terms of operations at 14.3. As a result of the improving profitability over the last couple of years, we've seen increased tax payments. Investing activities of 2.7 million reflects CapEx and investment in R&D as the business continues to grow. Financing activities relates to the cash flows from right-of-use assets, as well as the payment of interest on the group's debt. And finally, the dividends paid to shareholders of 2.3 million. And that results in net debt at the end of the year coming down to just under 5 million at 4.7 million. In terms of net assets, continued to see growth in the net asset value, with the retained profits adding to that, offset in part by the dividends we paid out to shareholders in the year. I shall hand over to John, who will give you a little overview of the components division.
Thank you, Pete. Just for illustration, the pictures here show the kind of devices that we sell in the components division, from microprocessor chips to optical semiconductors, displays, communication chips, and even finished product that our customers would consider to be a component in their system. A component to our customers is often a complex block. It can be an entire microprocessor system on a board, and they are then able to design that into their own end equipment. And this approach can save hundreds of hours of design time for the customer, coding time, testing time, and that accelerates the customer's time to market by using our expertise. Just taking a quick look at the applications that we would typically be found in, there are a whole multitude of applications, but the key areas for us are anything from life sciences and medical, which are very much growth markets at the moment, through automation to military and space applications. Space applications are very high-end applications and generally demand a higher price and margin. And then we go through things like 5G for smart cities, and we have all the communications products in between. The markets are diverse, but our focus is clearly medical technology. Industrial applications are still important. Communication systems, very much a growing area, and that would include things like cellular and Wi-Fi, RF, LoRa communications, and IoT systems as well. One of the things that we do within the components division is enhance our margins, and the way that we do that is the components division offers a number of value-added services. For example, we're able to carry out a multiplicity of processes, and these allow the customer to utilize our parts without intervention. So that could be that we're programming a semiconductor device, or we might be providing long-term protective storage, in fact, using the same materials that are used to wrap aircraft to keep them in pristine condition. Or it could be something as simple as baking an electronic device to remove moisture. And that allows the device then to be put onto high temperature automated soldering lines without cracking. Our value-added processes are really the things that lock customers to us and increase our value to those customers, and they're chargeable. So in short, the customer relies on us to provide parts that go straight to their production line. Not surprisingly, customer partnerships are the key to longer-term repeat business, and the customer's ability to trust Solsta's product and application knowledge is what allows them to resolve design problems, to solve complex issues, and really to develop products that are robust and reliable. Customers rely on Solsta to deliver parts that work out of the box every time. A recent application example, for example, to give you some flavor to this, used Solsta's engineering team to pre-configure routers and modems before shipping them, and that allowed devices to be shipped directly to retail outlets where they could be plugged in and work without intervention. And to really illustrate that, these were going into a well-known coffee chain where it'd be very difficult for a barista, for example, to program an IT-based device, chargeable. All of that pre-configuration is chargeable. Second example, you see the meters in the bottom right-hand corner there. Those are industrial meters for water metering, not the sort of thing you'd see in your home, but in industrial uses. And they used to use the telecommunications network to communicate. Of course, that's being switched off. So Solsta's engineers were able to go in and ensure that the customer was able to transition to cellular comms in a reliable and timely manner. And equally complex and just as important is our ability of the sourcing group to locate hard-to-find products. The reason this is important is because that sourcing group ensures that these products are themselves reliable, that they meet the exacting military standards that they're being used in, and that they're not counterfeit. Thanks, Vic. Probably the best known side of the business is the franchise side of the business, where we represent overseas manufacturers, or not necessarily overseas, but mostly overseas manufacturers here in the UK. And the components division really works with state-of-the-art technology manufacturers. It's true that this business is constantly scanning the technology horizon for what's next or who's next. And the examples I would give you there are Quectel, that you see listed. Solsta introduced those products to the UK about 10 years ago. At the time, Quectel were virtually unheard of, and now they own over 50% of the cellular chip market worldwide. Excelitas is another one. They are a Canadian company, and they happen to be a world leader in optoelectronics. And then some more familiar names like Microchip and Mitsubishi, who most of you will recognize as being world leaders in semiconductor products. So essentially, we use our expertise and market knowledge to link up the technology to the application. And that keeps our customers at the forefront of the technology race and guides them to the most appropriate solution for their application. So you saw it at the start, but in short, we turn customers' ideas into plans and those plans into products. Complementing the franchise business is our own brand components. And this really is part of the strategy to improve the gross margins and reduce the dependency on third-party suppliers for the components division. We have two areas of own brand products. We have the Pacer products, which are optoelectronic components, and these tend to be custom sensors which are bespoke for each customer. They can be more complex products like the laser range receiver that you see in the center there, but again, they're bespoke and for a single customer. The advantage we have now with our Pacer facility is it's been certified to ISO 13485. That's the medical standard, a very important standard because it allows the customers to have confidence in our ability to manufacture and trace product right through that manufacturing. So some of our major customers are now coming back to us requesting that we build more of their product because of that certification. And then, of course, Duracool, which is a more recent range of own brand products, and those are relays and contactors. They're a standard range of products. And the advantage for that is that we can sell those products through other distributors worldwide. So we don't have to be physically present in those countries. And we have set up in the last 12 months a whole network of independent distributors that will sell those products for us. So at its very core, Solsta effectively links up the whole of the electronics community, and that provides the solutions to the problems that the customers are facing. And in so doing that, Solsta becomes the trusted advisor that really keeps customers coming back time and time again. So you can see from the diagram how Solsta is in the center, linking products and technologies and providing solutions, providing application support, even providing customers who don't have manufacturing capability with the contract manufacturers that can help them out. So in short, Solsta is the vital component. Thank you, Pete.
Okay. We operate in diverse environments and applications on land, sea and air, from the seabed to the edge of space and everything in between. Our systems are engineered in partnership with our customers, where we look to become an extension of our customers' engineering teams. I think what's very important to state is here we work with customers that value the engineering skills we bring them and are prepared to pay for that. The common denominator is the requirement for our products to survive in the given critical applications. In doing so, we engineer applied technology which meet the demanding specifications required in our target markets of medical, transport and defence and security and industrial. And our products are fit for purpose for these given applications, whether that be size, weight, power, temperature, pressure, wind and rain. Our products are designed to last.
So here's an example of how our systems help solve problems. The Wave Relay Communications Network, which is utilised by customers in the emergency services, security and defence space. We provide an integrated network which connects the data assets on land, sea and air. And in this slide, you can see a couple of illustrations here where at the core is the Persistent Systems radio communication module. However, as our part of that, we've been developing and supplying communications products that are engineered as part of that ecosystem. So if you look on the bottom left, you can see where the communications module was installed for a marine application with wires and zip ties. We engineered a solution that was fit for purpose with waterproof connectors and properly ruggedized and protected to ensure that it met the requirements of marine environment. The center image, if Matthew would describe as Steatite in a box, that center image at the top is a command room in a box. It's got embedded computing, antennas, comms, displays, keyboard, video, mouse, battery power, and mains power. And that does what it says on the tin. It provides a portable base station that all of those connected data assets can feed back to, so that the user can use that data to make decisions, operational decisions. The bottom image is embedded the communications module into a drone. And our systems business not only provides the communication solution, but also battery packs, image capture and processing as well. And the right-hand image is a tracking antenna, which can help to connect those assets across a longer range So we are an integral part of establishing that ecosystem and providing that system for our customers.
Thanks, Pete. Important slide this for sort of, a long-term organic growth plans and initiatives. So we've announced last financial year we're building our relationships with a number of tier 1 prime contractors. We see significant midterm organic growth opportunities in these larger, more complex systems. That's just for illustrative purposes, it gives you an idea of the scale of the products that we'll be looking at, and they require additional space to build. So based on a contract with an anchor customer, we're in the process of establishing a new 16,000 square foot production facility in Tewkesbury in Gloucestershire, which is in a great location in terms of transportation connections, giving us significant production space that we can grow into as we secure further new business, and access to production engineering talent pool, which benefits from the M5 corridor, Bristol to Cheltenham through Tewkesbury to South Birmingham. So a key element of the growth drivers of the business on our systems integration system side of the company. Once the integrated systems facility is operational, to complement our existing test and measurement and engineering capabilities, we'll be targeting larger, long-term opportunities across the aerospace and defence sector on land, sea and air. The prime contractors are actively seeking high-quality engineering partners with whom they have trusted relationships to deliver those more complex, high-quality systems where through-life support is the norm. We're one of an ever-diminishing number of independent accredited businesses able to fulfil this need. Our focus continues on the 4 key pillars of our strategy, which we established in 2018. Talent development has been the cornerstone of our success in FY23-24. We continue to work to improve diversity and to strengthen the senior leadership team in custom power. We're broadening our range of complementary products in the defence and security sector through R&D investment in more complex systems to meet the ever-growing demand in this sector, and in components expanding our own brand product range in Duracool, whilst at the same time closing an highly energy intensive production line in glass to metal seals, and maybe we'll come onto that a bit more in later in Q&A. On internationalisation, to assist cross-selling in Europe and the USA, the custom power brand has been adopted across our entire power business unit, and we've secured new franchise in the USA and recently announced new contract wins there. Finally, we successfully unified our components division under the new Solsta brand and carried out our own brand refresh the rest of the group to create that family brand on which we can build. This can only assist in improving the cross-selling opportunities across the group. Work continues to develop our antenna own brand product with special focus on the United States. M&A continues to be an integral part of the growth strategy. Our approach on M&A is based on risk management and capital allocation, where we look to reduce the risk of delivering on our growth strategy. In identifying potential targets, we don't have a one-size-fits-all approach. It's tailored to ensure that we de-risk the deal and strategic execution. The financial assessment of the target drives the price we pay for targeting those deals, preferably earnings enhancing in the first year, also looking to minimise the ROI by delivering growth post-acquisition. With a strong pipeline of potential targets in terms of current areas of focus, we're first looking at businesses to support our ambition to develop our own brand product portfolio, and secondly, securing and developing the US sales channel for some of our systems and antenna products. We started to look at diversifying our supply chains to reduce our reliance on China, so it's coming in as China Plus One. This complements our work to add new franchises, for example, Digi and Inseego, which we've secured for the USA market, whilst looking to develop own brand range, both organically and through M&A. Turning to organic growth opportunities, having reorganised and refocused both our power and US components activities, we've already started to see the fruits of that work with a $5.1 million order won in Q1 of this year. Securing the medical accreditation ISO 13485 at our Weymouth facility that John mentioned earlier, an important step in expanding our capabilities and credentials across the group. To drive that growth in that med tech sector, where we see great opportunities for sustainable midterm growth. The investment in our integrated systems business unit in Tewkesbury, built on demand from that anchor customer, will provide capability, capacity, and a foundation to target growth with all of our prime defence contractors, building on established customer relationships, and so giving us the potential to grow significantly in the midterm. Our current trading is broadly in line with management expectations, and despite some softness in the industrial and transport sectors that we mentioned earlier, I'm confident that we have really strong midterm growth prospects for the group. And happy to take any questions that you may have.
Super. Thank you, Gary. Thank you, Pete. Thank you, John. We have a number of questions that were submitted ahead of the presentation, but please do continue to submit your questions using the Q&A tab on the right-hand corner of your screen. Gary, sounds a bit like your voice might be going after a long day of presentation.
Lovely summer cold developing. Thank you.
So actually, I might, if I can, I might just put first these questions to Pete. Pete, we had a question around the NATO contracts. Obviously, we had the pull-in from last year. What ongoing business do you expect from NATO, given the strong orders in 2023 and 24?
Absolutely. Thanks, Tom. So we absolutely have some ongoing training as part of those programs, which is lower revenue, but very much higher margin business compared to the supply of the products. We haven't, this is an install base, which has taken many years to secure that opportunity to get that user to adopt the technology. Pleasingly, it's a bit like the iPhones. If someone walks into your office with an iPhone, certainly we think the ability to get other users to adopt the technology will benefit from the fact we've got a much greater install base. So we see good opportunities for further follow-on orders at scale. Whilst we haven't got those in the order book at the moment, we certainly have got a lot of work going on with field trials with other users across the NATO network. So absolutely, there are follow-on opportunities. We're not counting those chickens yet, but there is base load of business in the order book as well for training and ongoing supply of product.
Great. Okay, super. John, if I could put this next question to you, maybe. Do you expect to see significant improvements in the components division performance this year?
Yeah, fair question. So I think the best way for me to look at this is perhaps to put some flavour around what we did last year, and you'll see why some of the results we got were there. So last year in the United States, we were very focused on completely restructuring that USA business. And as part of that, we exited from what was an own brand product where we were making glass to metal seals for some other product. It was a highly energy intensive product. And frankly, it was not a cost effective product. So in terms of our revenue, we discontinued that line completely. And we in fact closed that facility. And the second area that impacted revenue was the destocking at customers. That continued last year. And to some degree, it continued into a slower market. So it was kind of a double whammy whereby we saw the customers overstocked and their output slowing. So we saw some of our orders moving to the right, but not really any cancellations. And then in terms of profit, we closed the facility. That had an impact on the bottom line. For prudency, we had some exceptional product write-offs. And of course, there was a return to more normal lead times, which I think has been well publicised across the industry now. But what happened there was that caused some manufacturers to push product out to the channel, and that in turn resulted in some prices being lowered. So the bottom line is we're not expecting to see any of that repeat this year, with the possible exception of the slight overstocking continuing. But in terms of margin, if it gives any comfort, in the first quarter of this year, we've seen that return to normal levels.
Super. Okay, we do have a couple of questions on margins, so we might come back to that. But you did mention the US there, and Martin has asked, are you still planning to upgrade the US facility? I don't know if you
So what we've done in the United States is we've now refurbished part of that facility and turned that into our primary distribution center for the United States. People are being retrained there so that they can work across what is effectively a major logistics operation for us. We won some significant new franchises out in the United States. So there were franchises we had here in the UK. Because of our success here, those manufacturers gave us the franchise in the United States. And I think we've already announced that in the first quarter, we saw about a 5.2 million contract on the back of those new franchises. And that is taking place in that refurbed facility in the United States.
Great, thank you. A couple of questions on margin, and Pete, if I can put them both to you, because they may interrelate, and therefore you may end up answering both questions in the same way. James says, it's good to see the margin increasing. Where can we expect this trend to get to? Are these economies of scale pulling through? And Scott said, what sort of revenue figure is required to achieve a 12% margin? What would be the split between systems and component to achieve this?
Okay, so answering the first one first. So the margin trend that we're seeing is what I would call back to normalized levels. Now, we don't typically disclose what our gross margins are, but the emphasis on higher margin products, so for example, our own brand and so on, what I can tell you is that our own brand products operate at about somewhere between 13 and 15% higher margins than our distribution product. So there is significant opportunity for us to keep increasing the material margin, the gross margin. That typically flows through to the bottom line. A lot of our business, as people know, is revenue driven, and that ends up in the PBT line. In terms of the 12%, I'm going to pass that on to Pete.
Thanks, John. So yeah, operational gearing is a big part of how we will continue to achieve margin accretion. And as John's talked to, we have seen the benefit of the operational gearing in the current year, where we have particularly strong billings, and that saw our operating margins increase to double digit from what's traditionally been more like 9%. And the mix was the other question between systems and components. And I think, more normally, it's been 50-50. In the current year, we saw a particularly strong year for systems, and that did richen the mix of margin in this current period that we've seen. So I think, are we expecting to get us to 12% overnight? No, but over our horizons, our strategy horizons, which are to 2030, we absolutely think 12% is the right ambition and the right target for us to be working towards.
Gary, you're muted there, Gary, if you want to add something.
Okay. In addition to that, John's mentioned the own brand, but we've got the work we're doing that I mentioned earlier in Tewkesbury, that will be those more complex systems. They command higher margins naturally, and also across our antenna business, the margins there typically 50 to 70% gross margin. We're looking to develop that product range over the medium term. So again, that can richen the mix. So there's all work there to develop those gross margins that will fall through to net margin as we move forward.
Great, super, thank you all. One for you, Pete. Should we expect an improving net debt position?
Yeah, clearly, as I talked about on the previous slide, we saw a very significant pull in. That working capital has unwound in the first quarter of the year. So, as we continue to be cash generative, absolutely, we will look to see net debt come down. That puts us in a strong position to finance investments, be that in Tewkesbury or potential M&A opportunities as we look forward.
Super, great. Okay, well, that's lovely. That was the last question in the queue. So thank you, Gary, Pete, John, for updating investors today. Could I ask investors not to close this session, as you will now be automatically redirected for the opportunity to provide your feedback. If anyone has any further questions or would like additional information on Solid State, please do get in contact via solidstate@walbrookpr.com. Thank you all for your time, and we look forward to updating again soon.
Thank you.
Thank you.